The pattern has broken out. The situation still looks uncertain. Does the price of Bitcoin need to pull back a bit more before making another move upward? Let's get started. Hey there, welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and a selected altcoin. As you already know, we take a look at the charts from 4 different perspectives: technical, on-chain, fire charts, and from the AI perspective, where we use AI analysis to review all coins available on Kanga. You appreciate this, as the number of our subscribers keeps soaring sky high. Thank you so much. However, I know that not everyone who watches these videos is subscribed to the channel, so I encourage you now to hit that subscribe button, give us a thumbs up, and leave a comment, even if it's just for the contest. And remember, what's included in this material absolutely does not constitute investment advice. For advice, consult a licensed advisor or simply do your own research. If you're okay with that, grab your coffee and let's get into the analysis. The breakout from the descending channel on the Bitcoin chart has happened. This happened exactly on Wednesday and Thursday of last week, so shortly after our analysis, we said that this scenario was highly likely to play out. As we can see, this descending channel right here has just been broken. Currently, the price of Bitcoin is hovering around the upper boundary of this channel, and honestly, I can't say that this is a signal I see as positive in this case. On the contrary, it's actually slightly negative, because we can see that the upper boundary of this channel is being breached multiple times. And as we know, descending channels in this situation, when we have an uptrend, are continuation channels, so this breakout to the upside should have been much stronger. But it's worth pointing out exactly what happened here and why, in fact, the chart looks the way it does. So, on Friday, when I'm highlighting this red downward candle of about 1.5%, we experienced some news on the market, where after more than 14 years, some dormant wallets woke up and 80,000 bitcoins were sent to other addresses. This created certain risks that these bitcoins, after so many years, would be dumped on the market, and as a result, this uncertainty appeared. Now, this uncertainty is emphasized by various factors, although it's worth noting that from a technical standpoint, it doesn't actually look that bad. It's worth paying attention to how the moving averages look at this moment, especially one of them, which is the 50-day moving average. I'll remove the others so they don't create any noise for us here. Let's notice that recently, Bitcoin has very often bounced off this moving average, just like it happened here, and here as well. Here, we did have a breakout to the downside, but basically with just one candle, the 50-day moving average was regained. So, in a situation where some turbulence might occur and Bitcoin could pull back, I see the 50-day moving average here, which, by the way, is located around the horizontal support level I marked earlier, and I'll highlight it a bit more now, around that $106,000 area. Well, in my opinion, this is a good buying opportunity if Bitcoin really needs some momentum to break out. Momentum that would mean it has to pull back in price, gather liquidity, and then break upwards. Let's check some other indicators as well. As usual, we always move on to the RSI. The RSI is steadily holding above the 50 level. And as we can see, in this case there are no divergences here, whether bullish or bearish, so from this perspective the RSI is neutral. But let me remind you once again, it's still in the bullish zone. Since volatility is getting lower and lower, it's also worth paying attention to the historical volatility index. I'm turning it on right now, and as we can see, it has reached relatively low levels. Currently, it's hovering around 24, 25, and it's on a downward trajectory. Let me just remind you that the historical volatility index tends to drop sharply when Bitcoin is going through a consolidation phase. This, in turn, can mean that when historical volatility is low, the likelihood of a dynamic move is very, very high. Well, anyway, we can see here some rebounds that have happened several times recently below the 20 mark, at 17, for example, right here, as I'm pointing out with a cursor. And if we look up at the historical volatility index, we can see that there were some declines here. Bitcoin experienced some drops, and although these drops were gradual, they resulted in increased volatility. It was very similar here, by the way. Consolidation, slight declines, and then shortly after, increased volatility and a breakout to the upside. There are actually quite a few such situations you can observe on the Bitcoin chart. Here, I'm highlighting another one, where we had a breakout to the upside, that breakout to the upside, then a subsequent consolidation. Historical volatility dropped again significantly to around 18, and then we saw a continuation of the upward movement. So from this perspective, I expect that something similar might happen here. Historical volatility doesn't necessarily have to stop at these low double-digit levels. It can go much, much lower, even below 10. However, even in these low double-digit areas, it's already a sign of a pretty decent move coming. Will this move be up or down? You know, if you watch crypto market analyses regularly, I've said many times that I expect a breakout to the upside. A breakout that should push the price of Bitcoin to somewhere between $119,000 and $121,000. At least, that's what the conclusions from the chart patterns and Fibonacci retracements based on the trend suggest. But besides that, it's also worth paying attention to the broader perspective, and in this case, I'll refer to the weekly chart perspective. Last week, we discussed what happened on the monthly chart. There, we saw the highest monthly candle close in Bitcoin's history. June was the highest monthly close in history. However, now, in the past week, we experienced the highest close on the weekly chart. The increase was about 0.8%, so relatively small, but it did result in the highest close. Besides that, the RSI remains at 63, where, as we know, the bulls have the upper hand, and the MACD histogram, meaning these lower candles here, are gaining bullish momentum. We can see that the histogram is getting darker, which means the bulls are taking control of what's happening on the market, and it really looks quite promising. A week ago, we had the highest monthly close. Currently, we're seeing the highest weekly close. Who knows, maybe soon we'll see the highest daily close as well, which is something I wish for myself and of course for you too. And as a fun fact, I'll add that a few days ago I publicly asked you what Bitcoin price you expect at the peak of the current bull run. And interestingly, those answers were actually quite realistic. 9% of respondents said that 112,000 per Bitcoin was the peak, and basically, it won't go any higher. But nearly 50% of respondents stated that 112,001, up to $150,000, is the range where Bitcoin should basically reach its peak value. Another nearly 30% said that maybe Bitcoin could reach a value of 200,000. Bravo! I would like to sincerely congratulate you on such results. And that's mainly because you don't give in to the general hype. You don't just follow what Michael Saylor says, or even what Kathy Wood says. These astronomical values don't get to you, and you mainly rely on common sense and analysis. Once again, a big round of applause. Taking into account the current structure of the Bitcoin chart, considering what demand looks like, and it's really strong, which we'll discuss in a moment on the ETF chart. I decided to go long on Bitcoin, and not just with one, but actually 2 long positions, which of course I opened on Kanga on our futures market. And I opened a long here, for example, at the initial price times 10. Maybe let's start with that. At the initial price of 109,350. Later, when Bitcoin dipped a bit lower to 108,836, I opened a second long. This one was times 20, and honestly, I feel very safe with them. If Bitcoin drops anyway, I shouldn't experience liquidation. However, I plan to add to my position. And I plan to add to it somewhere around $106,600, where we have the mentioned 50-day moving average and our horizontal support. If there are any turbulences here, I expect a bounce from this level. I expect that Bitcoin will break upwards and maintain its upward trajectory for a longer period. In my opinion, a new all-time high in July is highly likely. And now, let's look at Bitcoin on the fire charts. Let's start with who is actually buying. And we can still see our brown line in play. And as we already know, the brown line on our CVD represents whale wallets. That is, those holding between $1 million and $10 million in their balance to buy Bitcoin. And we also see the green line positioned very high, which in turn represents wallets with a balance from $1,000 to $10,000. These are the wallets that are currently in play, And as we can see in recent days, retail investors have stepped away from buying, and for the last 2 days, they've basically been on a downward trajectory. The remaining wallets, as well as the purple ones, which are the second largest wallets on our chart, are also not buying at this moment. When it comes to some basic levels of resistance and support, here, a very clear resistance is forming, basically right where Bitcoin is currently sitting, which is around $109,000. And there are sell volumes here of nearly $12 million in Bitcoin, I should emphasize. So it's actually not that much, and these volumes basically entered the market, well, essentially today at midnight UTC, so they're fresh. I wouldn't be surprised if they get absorbed quickly or simply withdrawn. The next resistances we see here are around, well, still $110,000. Here we already have a bit more, because there are 42.5 million. It's worth noting that the higher we go, the more these cell clusters accumulate, although they're already smaller in the case of 111,000. Here we can see 21 million. A bit higher up, there are still a few million, about 9, sitting there. And in the case of $112,000 per Bitcoin, we see here $20 million worth of Bitcoin waiting to be dumped on the market when that value is reached. If we're looking for some stronger support, apart from the areas we currently see below our price, and let me remind you, our price is represented by the blue line. Well, above all, we can see this bright, high-volume line, which accounts for $13 million waiting to buy Bitcoin in case of any turbulence at the level of $105,000. But besides that, it's also worth noting that we have some pretty well distributed by clusters right here, just below the current price. Therefore, in my opinion, turbulence doesn't necessarily have to occur at all. Ethereum is breaking above a very significant resistance, but soon it will be facing another one. Let's take a look at what's happening on the chart. So, in the last video, we mentioned that on the Ethereum chart, we're seeing what's called a bullish cross, a golden cross, between the 50-day moving average and the 20-day moving average. By the way, at that time, these moving averages were still acting as resistance for the price, but by Wednesday, they had already been broken through. And we can see that after the breakout, maybe I'll also remove our yellow line from the chart, which is the average moving well, since we don't need it now. And we can see that after breaking above those moving averages, Ethereum dropped to the 200-day moving average and tested it as support, then bounced up to the 50-day and tested the 50-day as support again, before finally bouncing off it yesterday and climbing a bit higher. Interestingly, I was planning to go long on Ethereum. Unfortunately, I was literally a few minutes too late, so I didn't do it, but I was actually predicting an upward move here. This green candle, this bounce off the 50-day moving average, seemed very logical to me, and I could have made a profit, but unfortunately, in this case, I didn't. At the moment, I'm not entering Ethereum because Ethereum is facing another resistance. A resistance that's much more formidable, I would say, because it's this zone, this gray box, which has been tested many times as resistance and also many times as support. This is a very significant zone where supply should come into play in this case, although I hope that at some point the bulls will break through it. Especially since on the RSI we're seeing a breakout, and a very clear one, above the 50 level, which means the bulls are taking control of the market. But in such zones, you have to be careful, and if I decide to enter Ethereum, it will only be after an upward breakout. Unless, of course, I decide earlier that it's a good opportunity to go short. And I'll place the short position somewhere exactly within this gray box. For now, though, I'm just watching what's happening, and I'll keep checking in and making my own decisions as things develop. Looking at the CVD on fire charts, we can see that, despite everything, there's still demand for Ethereum. Let's take a look at what's happening on the chart. And here we see our brown line. The brown line, as usual, represents the whales. It's currently on a very strong upward trajectory. The purple line is following it, and so is the green line. We can also see that the blue line is rising quite nicely, so there's some activity building up here as well. And the red line. In this case, the red line represents wallets holding between $10,000 and $100,000, waiting to buy Ethereum either during market turbulence or at the current market price. It's also worth noting where the key resistance levels are, and they're quite close, because at the value of $2,650, we have volumes of around $7.5 million in Ethereum waiting to be dumped onto the market. And a bit higher up, at 2.68 thousand. Here, we have a bit less volume, just over 6 million, but still, these are sell-side values. So, we watch and wait to see whether demand, as shown by the CVD, will win out, or whether supply, which we can basically observe directly on fire charts, will prevail. Along on Chainlink? Well, it sounds tempting, especially when you look at the chart. Alright, let's take a look at what happened a few weeks ago. We talked about Link and mentioned that this gray box here is a good support zone, from which Link should theoretically bounce. And here, demand should be very clearly visible. We also noticed that Link broke slightly below, but very quickly returned to this zone. We were expecting such a breakout as well. We said that it's possible for Link to dip a bit deeper, but a quick recovery of these levels should result in a trend reversal to an upward trend. And it's worth noting that currently Link is breaking above this downward trend line that I'm pointing out here. And it's also breaking above the 50-day moving average. So, in my opinion, an upward trend on Link is currently happening and it could push the price up, for example, to around $15.60, or even to the 200-day moving average, which at this moment, I should note, is at $16.50. But this moving average is currently on a downward trajectory, so it's worth keeping it updated and checking exactly where it is at any given time. Nevertheless, it's very clear that on Link, the bulls are quietly gaining control as well, because they're taking over the RSI, which in this case is already oscillating around 55. As we know, that's above the 50 level, which is exactly where the so-called bull zone is located. So from this perspective, Link looks pretty good. In my opinion, the trend will continue here. If the 50-day moving average holds today, then tomorrow, I hope and truly believe this, the move will continue. At least for now, everything technically points in that direction. A positive sentiment on Chainlink is also shown by fire charts. We can see the current price action that's happening on the fire charts. Well, there isn't really much to say here, but it's worth paying attention to what's happening on the CVD. And here, basically all wallets are currently participating in the buying action. There's really no need to name them individually. We can see that basically each of them is currently on an upward trajectory. The only ones not participating in the trading are the whales, where we have this brown line here, flattened at the bottom. And that's because if whales participated in trading Link, they would simply drive the price up too quickly, so most likely they are also among those smaller market participants. If you want to switch over to your altcoin, remember, it's a very simple thing to do. All you need to do is register on Canva, and you'll find the registration link in the description of this video. You'll go through the cryptocurrencies we have and choose the one that interests you the most. Just remember 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be KNG. And third, it can't be any meme-coin. So you know what to do. Comments are open. I'm waiting for your opinion. What does AI suggest about what's happening on cryptocurrency charts? At least for those cryptos that we have on Kanga. Let's actually start with Bitcoin for a change, and not with all coins. And here we can see that AI tells us there's growth potential to reach, attention, a new ETH, which in this case should be at least $113,484.50, so that's pretty impressive. That's plus 4.3% from this moment, which should happen within 6 days. As we can see on the chart, a descending channel has been identified here, and from this channel we should see a breakout to those price levels, which will be the new ETH. Quite promising. I'm curious to see if this prediction will come true. Besides that, we see Polkadot, which is also in a descending channel, with breakout potential of around 17.5% over the next 6 days, so about the same amount of time. And that's a pretty decent potential profit. In addition to that, there's Ethereum Classic, a bit of a forgotten cryptocurrency, I'd say, which has growth potential of about 6.7% in just 9 days from now, so that also looks quite promising among the cryptocurrencies I've mentioned here. Basically, you can go long or short, if you only want Bitcoin, of course, but the others will probably be available on Kanga Futures, soon as well. There's madness around the Bitcoin spot ETF in the United States. Let's take a look at this candlestick I'm pointing to right now. We're going back in time. Watch out. To June 9th, 2025, so exactly a month ago, and let's pay attention to what has happened since then. We can see that we've basically had a series of green candles here and only one selling candle, just one in the last 30 days, which, by the way, was completely absorbed the next day by buying, so the buying frenzy is in full swing. Even though Bitcoin is consolidating on the technical chart, which can be boring, tedious, and really makes some people start selling off as they wait for the growth they've been hoping for but just can't seem to get. And from the perspective of what I see here on this chart, I absolutely believe this is not the time to have any doubts. In my opinion, Bitcoin is breaking out upwards, and I'm really strongly convinced of that. But remember, this is not investment advice. Time for on-chain analysis, and today we'll start with an unusual indicator that I haven't mentioned here before. We have this colorful chart in front of us, and it tells us how far Bitcoin is from its ATH in a given cycle. Well, basically, you can easily assess things like this through the lens of technical analysis, but here we're taking a slightly different perspective. It's worth noting that this period right here, is the longest time in Bitcoin's history when it has stayed so close to its ATH. I'll just point out that these white areas that spike upwards are exactly the regions we're talking about here. It's also worth noting that in 2017, we had a similar, prolonged period, not exactly a consolidation, but rather multiple attempts to reach the ATH and break through it. However, in terms of duration, this is now the longest period. What could that indicate? Well, above all, it suggests that Bitcoin might be stabilizing its new high value, searching for its new fair value, taking demand into account, of course. It could also mean that we might not experience such deep corrections on Bitcoin during bear markets anymore. You can actually see this through the red dips that appear on this chart, which are getting shallower and shallower. Well, maybe this time Bitcoin won't even reach those yellow areas that we see here. We'll definitely come back to this chart in the future, when we find ourselves in a bear market, and take a closer look at it. But besides that, it's also worth pointing out that this could mainly indicate that demand is strong, and it's strong even though there's no real FOMO on the market right now. Other important indicators to mention are those that show how the biggest investors are behaving. Why is that? Well, we can see there's a lot of activity in ETFs, and the wallets holding at least 1,000 Bitcoins or more have already been identified by us as those belonging to ETFs. And besides that, we recently saw a very strong movement of 80,000 Bitcoins, which were moved after, let me remind you, being dormant for over 14 years. So, it's worth noting whether anything has actually changed in the balances of these wallets, and whether we should really expect a drop. Well, considering wallets that hold a balance of 1,000 Bitcoins or more, we can see that their number keeps increasing, so nothing is really happening here. These Bitcoins most likely haven't been sent to exchanges, so we probably shouldn't expect a drop here. However, it's better to discuss this by referring to the chart of wallets that hold 10,000 Bitcoins or more. And we can see that there were indeed short-term declines here, but later on, there were also rebounds. So those Bitcoins that recently moved were most likely just transferred to other, safer, probably newer wallets. And to supplement the information about what's happening on the exchanges and whether people are really starting to panic, it's worth looking at what's going on with exchange balances. So here we present the amounts of Bitcoin held on Binance, OKX, Bitfinex, Deribit, Bybit, Huobi, and KuCoin. And we can see that this chart keeps trending downward. The Bitcoin balance on these exchanges is getting lower and lower. And we can see that any moment now we might be hitting new lows. New lows that, let me remind you, the previous significant lows we're now trying to break through were reached back in December 2020. And Bitcoin keeps getting closer to those levels, so the less Bitcoin there is on exchanges, the greater the potential for price growth. That's it for the on-chain analysis. Now it's time for a contest. Present your own analysis of one of the cryptocurrencies I mentioned in today's video. So it can be Bitcoin, Ethereum, or Chainlink. Present a technical perspective, on-chain, fire chart, sentiment, fundamentals, whatever you like. And remember, you absolutely don't have to agree with me. The author of the most interesting comment, which is posted by Friday at midnight, will win 20 KNG from me. And the winner for the previous episode is Zbyszek Kedziora, who analyzed Bitcoin. Congratulations, Zbyszek. please contact support to claim your prize. In today's episode, through the lens of descending channels, we talked about trend continuation patterns. If this topic interests you and you'd like to get to know it a bit better, be sure to check out Kanga University. You'll also find a link to Kanga University in the description of this video, where you can learn much, much more. I strongly encourage you to keep expanding your knowledge, and that's all for today. If you enjoyed this and you haven't subscribed yet, make sure to hit that subscribe button. And don't forget to leave a like, a comment, ring the bell, or whatever else you feel like. And please also rate this episode on a scale from 1 to 892, where 1 means not great, it should have ended, but I want to see more, and 892 means fantastic, and I want more of this. And if you do want more, well, I'll see you again next week. Bye.